The financial reckoning has begun. Hey, everybody, you're watching Bull Boom Bear Bust. It's Thursday, May 12th, 2022. Digital assets dropping. Of course, we saw what happened in the crypto market. 401ks also dropping with the markets. Most people were not ready or prepared for this. Most people did not have a stable asset fund for their 401k. Most people did not have a stable investments in their retirement account to guard against the market drop. And in my line of work, I do work in finance. In my line of work, I talk to people every day, and I'm seeing a big swing and a big change in moods and a level of panic now with this wealth effect being destroyed. So today we're going to talk about that and more. The wealth effect plus rising costs equal panic. Also, rents and home prices will continue higher. So you're going to see some assets, markets go down, other markets continue higher, especially rents and home prices. And it's not a good combination. The wealth effect is diminishing, and other costs in other areas are continuing higher. So if you're an owner of maybe several investment properties, this may be good news for you. Your wealth effect may not be dropping, but for most people, this is the case. Let's get into the first story right here. And let's start with this real quick. The fire season has already started here in California. We're only in mid-May. We see Orange County's already seen 20 homes destroyed by a fire, and we haven't even gotten into the worst of the fire season yet. My guess is we're going to see thousands of more homes destroyed this year in California, maybe even tens of thousands, as it takes months and sometimes even a year now with all of these shortages in the supplies. It takes a very long time to rebuild these homes, and homes are being destroyed faster than they're being built in many areas. Now, these were very um, large and expensive homes along the coast here, and we're just getting started in fire season. Just wait till August, September, and October. Historically, the worst months for fires here in California. Combine that with the 1,000-year mega drought that we're in right now, and we've got some big problems. And this is just one of the many reasons why rents and home prices will not come down. Markets may come down, your digital assets may come down, but real estate and rents will continue higher. And this is going to be a lethal combination for many people. Now, the average US consumer is beginning to feel the pinch. Shoppers say inflation is forcing them to change their habits. And I think very soon you're going to start noticing this when you go out. Yes, there's still a lot of people right now that haven't fully realized that the things that are happening are not temporary, that it's not transitory, that these things are here to stay, these rising costs are here to stay. And the people that you see spending hundreds and sometimes thousands of dollars at the amusement park, nothing wrong with that if that's what you want to do. It's a free country. But these people are going to start realizing that, hey, I better cut back because it's going to be either go get on a roller coaster or do I eat dinner? Am I going to miss a meal if I go on this roller coaster? So that's going to be the decision that many households, I think millions of households, are going to have to face here with the situation that we're facing. All the things that we're seeing currently are going to get worse. It's not going to get better. There's no solutions being discussed or implemented, and just keep on preparing for things to get much worse. Maybe another freeze on foreclosures and evictions, maybe more stimulus checks if that ever happens, will slow down the carnage, but those are not solutions as we saw. Just from what happened in the past couple years, we saw all the rescue programs. Did they really rescue anybody? Is anybody better off today, or are things actually worse now? Rents are higher, home prices are higher, prices higher everywhere you look. Markets now on the drop. The wealth effect is diminishing and crashing for some people, and panic is beginning to set in here, in my opinion. Recent article: U.S. producer prices rise more than forecasts and signs of persistent inflation. No surprise to anyone here on this channel. It always comes out, they say it's more than forecast, but none of us here that have been tracking the real situation and the reasons behind it, none of us are surprised at this. And with this cost of living being so crazy right now and continuing to get worse, continue to see this personal savings rate continue to drop. We're already at about a 5-year low. People have already given up the savings that they accumulated during all the shutdowns, when all the stimulus checks were sent out. that money's gone, and now most people are worse off than they were even prior to the great health crisis, shutdowns, and recession. Now, I was talking to a client at my job, and they were telling me their financial situation, and we tried to talk about ways that they can cut back and maybe save some money here and there. They had four automobiles, and this person kept a couple spare vehicles in case the relatives came over, and maybe somebody wanted something to drive. They could borrow a car, or maybe one car was in the shop. They could drive a different one, but they wanted to keep four vehicles. It was just one person. And people just don't want to cut back. They don't want to give up the luxuries and the extras that they may have, even though they see the writing on the wall, all the signs pointing to a lot of financial hardship coming for a lot of people. And people get stuck in their ways, and they don't want to change their spending habits. And that's why you still see people at amusement parks, people doing all these things that just cost a lot of money that are not really necessary. You see the sports events, stadiums are still packed. And in some cases, people are so, I don't want to say depressed. A lot of people are depressed, but people are so just frustrated with the financial situation and the economy and even the world that they just want to get away and spend money on just a few hours of entertainment. I get it. I understand it. People want to take a vacation thinking that's going to resolve their problems. And people are just looking for a temporary fix in some cases, even if it's just an hour or two, maybe a few hours here, a few hours there, maybe a sporting event to take their mind off of life. And I think that's why you see so many people putting so much money into entertainment and things that at the end of the day are not going to really help them in the long run. Now let's talk about rents and home prices. Yes, those are going to continue higher. The cost of living in some spots, and most spots, actually going to continue to go higher, while savings and wealth is going to be destroyed for most people. Now the top 10%, they'll be fine. They'll probably gain wealth, most of them anyways, during these times. But there is something pretty interesting happening in the housing market. Let's take a look at this chart. And we're looking at a chart here of home builder sentiment and home buyer sentiment. Now we see the huge divergence here just over the past few months. And if we look back before the 2008 housing bubble finally went bust, we see that home buyer sentiment dropped, and it fell off a cliff in this case, prior to home builder sentiment. So the buyers, they're the ones that first feel the pinch. We see rising mortgage rates, and then the builders and people trying to sell their homes, then they come to the realization that, hey, buyers have backed away, and then we see the home builder sentiment drop shortly after that. So if we look at the chart here, home buyer sentiment dove off a cliff 2008. Home buyer sentiment a few months after that, looks like about maybe 4 months after home buyer sentiment dropped. Now take a look to the far right here, even a bigger drop. This is about 3 times as big as the 2008 housing bubble. Home buyer sentiment dropped. Home builder sentiment, not quite yet. This could take a few months. Anything can happen. They could freeze foreclosures. They could drop mortgage rates again. They could hand out even more programs to help people get a down payment. Look what's happening here in California with the up to $10,000 handout for people. Adjustable rate mortgages are coming back. They can do a lot of things to keep this bubble inflated. And people are just going to continue to FOMO into the housing market until something breaks. And it could take longer than most people expect. And a lot of people are going to be financially crushed, before things actually play out, before things get better. So be careful out there, folks. Continue to prepare for what's coming. Either one, spend all your money now because everything that you want to buy today is going to be twice as expensive down the road, or save your money because you're going to have to choose between keeping the lights on, between eating dinner and going on that roller coaster. Please let me know down below what you think. Thanks everybody for being here, for watching this report. Be well, stay safe, stay prepared, keep stacking. Bye for now.